Banking on technology and SMEs. Will Kenya Commercial Bank succeed where others are struggling? Good evening. Many thanks for joining us. This is The Trading Bell. My name is O'Brien Kimani. Later on, I'll be talking to Kase Mbao. He's a research analyst at Diane Blair. We'll be looking at the figures, how Nairobi Securities Exchange has performed in the last 1 week. But for now, I'm joined by Joshua Oigara, Chief Executive Officer, KCB Bank. Joshua.
Thank you.
Nice to meet you.
Thank you very much. Okay.
Yes.
Thank you.
Good. Now, I want you, first of all, to explain to us, how is the banking landscape in Kenya with the onset of interest rates capping low, and of course a lot of disruptions in terms of technology?
Correct.
How is the market looking now?
So obviously, if you look at the last quarter 4, and now January, a lot has been said about the industry. But the impact has been, depending on where the bank is, large banks, medium-sized banks, and small banks. But the biggest impact which has happened is that you've seen a slowdown on lending. Naturally, overall loans are growing at 4-5% year-on-year basis compared to our usual 15 to 20%. So that, I would say, is the biggest impact we've seen today from the interest rate cap. But large banks like ourselves, KCB, we are lending, our loan growth is still at 15%. So we've taken advantage of what I say, flight to quality in the last quarter and this year. So we're seeing a good momentum. I call it a new normal. But banks this is not the first time of disruption. During the M-Pesa time, banks were disrupted.
Yeah.
In the last year, banks were disrupted using an interest rate cap amendment bill. And now we're seeing digital financial services and fintechs changing the way the business of banks is doing. So it's an exciting time, I must say, for the industry.
Exciting, but have we seen the worst yet?
Wow, let me say that if banks don't create, I am a strong believer that you need to change before you're forced to. So huge market opportunity exists in Kenya, and we've been very innovative. If you think about digital financial services, mobile payments, money transfers, mobile lending, algorithms, Kenya is on the forefront globally today. Yeah, if you're listening to what is happening across in China, in San Francisco, in Beijing, in Singapore, Kenya is actually sitting in a global spot. So let me say that the worst, you will never be able to say where in the past we would predict 10 years. Correct? Obviously, the market has been very tough. Bank stocks have taken a beating last year. Yeah. In that case, we've seen the worst. We believe the curve is standing. We are rock bottom today. I mean, banks like KCB, we are trading at a huge discount today. We believe that you can increase your valuation by 50% if you invest in KCB stock today. So yes, we've kind of seen I will urge retail investors today to come to market. Yeah, you are getting huge valued stocks. Today, KCB at our share price, we were at 50 shillings before. And the fundamentals of the assets haven't changed.
Haven't changed. And when you talk to all bankers,
yes,
they're talking about the tough time that the new law regime has brought into the market. Are we likely to see a concerted efforts by bankers, to try and lobby the state to repeal or maybe to relook at this law?
Two aspects, I would say. I'm not a big fan of high interest rates. If you're going to charge a customer 25%, 30%, irrespective of where they're going to be, they won't be able to pay the loans that you've given them. So we drive more bad behavior, high risk lending, and therefore non-performing loans. But yes, I can assure you that in the coming year, and when this year we have debating conversations with Parliament, with the Minister of Finance, with the Central Bank, to repeal the regulations, in terms of this amendment bill. But there must be a catalytic progress today to say, at what interest rate should you lend to a mortgage borrower, an SME customer, a personal borrower? What rate? And I kind of believe that, a neighborhood of 14, 15, 16 is around about what the rate should be.
Yes. So, still my question stands.
Correct.
As an industry,
correct,
are you lobbying the government, or are you in a position to lobby the government to see whether this law can be repealed or relooked at?
Remember, we gave alternatives last year.
Oh yeah, you did.
And maybe it wasn't good enough. Let me say it. In reality, the bill was passed. It means our proposals were not good enough. But if you ask me about the opportunities we see, yes, we are engaging to deliver the SME solutions that we proposed. Remember last year, we proposed a catalyst fund of 1% of total portfolio of 30 billion at around 10 to 12%. And then delivering it across all constituencies, all customers. That has not been fully delivered. So that is a basis for renegotiation and discussions. And I would say that I am positive that we should be able to have a fair engagement with government and Parliament on a better way to structure interest rates that are effective. But remember that another big debate is government is a big borrower.
Oh, yeah.
So if government is borrowing today at 12 and 13%, really, it's very hard to see how an ordinary Kenyan can borrow at 14 and 15%.
So since the law came into
Yes.
effect, what has changed? The quality of borrowers or the amount of loan that we are giving to borrowers?
So there are two aspects. Good borrowers are getting more loans. So
borrowers.
yes, absolutely. If your credit score is good, you are a single A or a double A, or your credit score, today we use the CRB scoring between 100 points to 900 points. So that gives you a different kind of aspect. But I would say what has happened is that banks are much more careful or judicious in the way they give credit. So naturally, lending to higher risk segments like micro enterprises, SMEs, is a bit slower now. But consumer lending and personal lending, we've seen an increase of almost 25% in the last quarter. So here is the story. So I was borrowing 100,000 shillings and I was paying 10,000 a month. With a lower interest rate, now I'm paying 7,000. So you have two choices. Either to reduce your loan repayment to 10,000 or keep 10,000 and ask for a top-up.
I want to take you back to, I think, 2015 and FSD,
Yes.
financial sector deepening.
Yes.
They released a report whereby they said the reason why a lot of, or many
Yes.
borrowers are
Yes.
not in a position to pay their loans.
Yes.
One of the reasons they cited was high interest rates. What have you seen some improvement in terms of repayment since you lowered your rates?
I don't fully agree that high interest rates made customers difficult to pay.
Well, it was one of the reasons.
Yes, but banks
cited.
assess, in my view, what is your repayment ability when they give you a loan. I must agree that in 2014 and 15, interest rate went through the roof.
There was a serious spike.
Yes, so from 14-15% to 25 to 30%. That's almost doubling of interest rates. So, but that has been addressed. So now where we are, we expect that lending should be able to increase in this coming year. So yes, it's maybe early days, but I believe that a cheaper interest rate or a cheaper lending would increase overall access to lending for customers. But also high interest rate meant that customers who could not qualify. So a good example was a customer who had defaulted before. So high risk customers generally, there's nothing wrong, by the way, for paying high interest rates if your risk is high. I mean, they borrow from unregulated financial institutions. Here we call them Sherlocks. People take 10% per month. So that kind of element, the banks are not able to provide lending to those kind of institutions. But I would say that this year, you should see much more credit available. And I'll ask the retail, every single customer, whether you're a farmer, whether you're doing some horticulture, whether you're doing a border, the interest rates are much lower today. There's no chance why you should not ask your bank for a facility. This is the time to do it.
Let's talk about your NPL
Yes.
book. And how do you plan to address it? And do you have a specific time frame as to how much you want it to drop by?
So we have this year has been very good for us. This year meaning in 2016, and I can't give you the full details, but I would say on our personal consumer lending, our NPL is the best in the market. It's below 2%. So if you issue a loan today of 100 shillings, 2 shillings will not be paid. But if you look at our large enterprises, this is where there's been a lot of challenges. You've seen profit warnings, large entities being able to have challenges to perform, and some of them you've seen them, some of them are listed entities. That is where we've had a difficulty. So our NPL today has remained at around about 7.5%. Our target was to take it to 6%. So that target, we still want to achieve it in 2017. So we have clear plans. It's never about the individual customers or consumers. It's actually the larger corporates, construction sectors, government entities, that we are bringing it down to 5%. And for us, our total portfolio is 30 billion. If you bring it down to 5%, we reduce an NPL value by 15 billion straight into the profit of the bank.
What are some of the strategies you are
Yes.
employing, to ensure that those who have defaulted,
Correct.
they honor the obligation?
So it's always a challenge about the business cycle. For large corporates, usually 4 or 5 cycles. If you see, we don't always have profit warnings by institutions in the exchange. Last year was more difficult as they restructure their operations, enhance their businesses, change their strategies, and then we also restructure their facilities. That we have done. So this year will be a year of, I would say, last year we ring-fenced our business operations. This year, we're going to see the benefits of a better performing businesses despite the elections. I mean, a lot of people are concerned about the elections, and I know maybe you may have a question, but that's an area that we think we are more poised to deliver. The third aspect is using technology, being able to predict. Now we have a lot of mobile loans. We can determine your loan ability to pay by scoring on your behavior. You know, how many phone calls you make, how many SMSs do you send, how much money do you get on your mobile wallet. Those ingredients determine your credit score. We call it a mobile algorithm. That is a better predictor on how you pay.
Good. You talked about you know, the looming elections, which are coming in about 6 months from now. Quickly, I want to hear from you. What do you see? How are they likely to disrupt the market that you operate in? And of course, I also want us to talk about the recapitalization of your bank. What instruments are you looking at? Right issue, capital injection, going forward?
But let me say that we don't expect a disruption. So we stand on one side of the continuum. So a lot of people say we are nervous, some are neutral. We are optimistic. I mean, we are local institutions. We're among the few oldest institutions here. We've been here over 100 years. So we also engaged in a lot of programs through the Private Sector Alliance that we are trying to say, how do we bring a peaceful elections coming through? So that process is running. Mukenya Daima program is something we're running as a bank. We support fully our staff. Remember, we have a lot of staff, 8,000 staff. We are in every part of our country. So I would say, yes, we expect a peaceful process. We are also prepared to support all our staff and all the communities toward a peaceful election. So we are not nervous about investment. We are clear that this will pass and it will be stronger. But if you ask me, okay, how do banks strengthen? So from a capital point of view, we are in excess of 100 billion shillings of capital. So last year we wanted to raise a rights issue for 15 billion, but we raised debt, what we normally call a tier 2 capital of around 10 billion. So now we don't have to raise a rights. We're not going. Actually, now next AGM, we're saying we've already raised enough money through many sources to be able to meet our business in the next 2 or 3 years.
So the question of recapitalization is out of the question.
There must be recapitalization in the industry level. Correct? So there is something internally, we call it capital assessment. And that is being, central bank has issued a new guideline for banks. So I would say that we expect, I am a big fan, and KCB, of increasing capital for banks. So that's an area that I think will be addressed. But for us, we already have raised capital that we need for the next 2 to 3 years.
Joshua, we are squeezed of time and we have to come to an end, but I want to find out from you in 30 seconds. What has been your experience listing on Nairobi Securities Exchange for almost 2.5 decades now?
I mean, for KCB, it's one of the best choice. We've been able to be in the market to raise, equity. We come in to raise rights for 3 times now. I mean, the exchange has enabled us to reach global shareholders across the world. KCB is among the, today in terms of volume, we're among the top 2 or top 3 in terms of volume in the exchange. So, and in terms of benchmarking, best practice, getting anchor investors and others across the world, we could never have done that until we were able to come to the exchange. So not just raising capital, but being able to network with other equally able institutions across the world, getting a different profile of shareholders, some long-term and short-term, and finally being able to articulate our brand. So today KCB can be benchmarked with any other bank across the world. We are basically compared across top 10,000, top 1,000 organizations in the world. That only happens because we are listed at the exchange. And we believe that any other organization that wants to be able to see forward, to think about the next generation, the best place for them to come is at the exchange.
Joshua, thank you very much indeed for passing by Trading Bell.
Thank you.
Asante sana. Thank you.
Thank you.
Joshua Oigara is the Chief Executive Officer and Managing Director of KCB Group, not KBC, but KCB Group, joining us here on the Trading Bell. You don't need to go anywhere. You're still coming back with a lot. Stay right here.
Thank you.
A look at how the figures oscillated on the Nairobi Securities Exchange in the last 1 week. Kase Mbao is a research analyst at Dyer & Blair. He's joining us to put these figures into perspective. Thank you very much, Kase, for joining us here. One thing I'm wondering, when you look at the four indices, they have some marginal improvements, but this is not what we were expecting, bearing in mind that this is a financial reporting season.
I'd say that from the financial results that we've seen, banks have not really performed as we had really expected. You'd find like Equity Bank was hit by some provisions from South Sudan. Also, the Banking Amendment Act has had a negative impact on most banks. So given the double-digit growth we're used to in profit after tax growth for banks for full year 15, for example, 2016 has been marginally compressed. So that's why you would find that even though banks are maintaining the same dividend payouts, investors are still concerned on the viability of the law as is right now.
Mm-hmm. And we know for sure that the banking sector is a critical component. Actually, it's one of the biggest components in the market. Are we likely to see then a depressed market going forward?
If I look at it forward, banks are still going to be hit for full year 16. You have that this is the first year that the Banking Amendment Act remains in place. And given that the fourth quarter of 16 has been very, let's say, it has hit them a lot, for the banking sector, we still have not gotten a lot of clarity on the full effect that it would have. Private sector growth is still depressed, showing that banks are majorly focusing on government paper and not their core business of lending. We are yet to see an improvement on some of the NPLs that banks are holding. And if you check that financial year for 2018 is going to be affected by IFRS 9 coming in. So there's a lot of uncertainty around the banking sector, and investors are having a wait-and-see approach. If you also add the election period coming on board, you're still going to see depressed markets.
And what are the sentiments of foreign investors? Are they still as enthusiastic as they have been in the past?
For now, foreign investors are just targeting stocks which give them a good dividend payout. It's about getting stocks which are well managed, who can weather the storm currently. For example, you'll find that Safaricom is trading well, BAT is trading well, EABL is trading well. So for them, they've decided to not invest so much in the market, just go for defensive stocks that will give them good payouts.
When we move to the top gainers, we have Kakuzi there, moving the most at 10.33%. What is not happening, or what is happening, bearing in mind that we are going through a very severe drought?
For Kakuzi, I'd call that an outlier trade, because if you check on Friday, there was a trade of 10,000 shares, but now on Monday, what caused the jump was a trade of 300 shares. So it must be an investor who just wanted to get into the stock itself. But then after Monday, there was a trade of 10,000 shares at just the same level. So for that, it's just an outlier trade, nothing fundamental.
Safaricom was the second biggest gainer at 9.69%.
Safaricom stemmed from the proposal about splitting the company, but now we've had clarity from the Communications Authority that it's not going to be split at all. So from that, foreigners have now started reinvesting in the company itself. You'll find from a low of 15.95, majority trades at 16. Now we are almost hitting 18.
So this move was sentiment-driven.
Yeah.
Good. And finally, for top losers, we have National Bank of Kenya. My biggest surprise is Kenya Airways. Why has it been included here, actually?
For Kenya Airways, I think it's a clarity on the succession going forward. You've been told that the CEO is going to remain for a period that's not been specified, as they're still looking for a substantive person to replace him. Going forward, I believe that a lot of revenue is going to be drawn into Kenya Airways. There's profitability that's expected to improve, given that they have their loss. And for future views, I tend to see that Kenya Airways is going to be a good stock.
Very good. And in the next 1 week, which counter should we track?
Next 1 week, I would check counters tier 2 banks. You have I&M that's not yet reported. And also tomorrow we're going to have Cooperative Bank reporting. Those are the two counters I would advise guys to track. Yeah.
Thank you very much, Kase, for joining us here. Good. Thank you. Kase Mbao is a research analyst at Diane Blair, joining us here on the Trading Bell. This is the Trading Bell. Stay right here.
know how the shares are being calculated to get the total volume.
Total volume is the sum of all shares that have traded for a specific counter on a particular trading day.
Well, and on that historical note, we come to the end of a Trading Bell program for today. Many thanks indeed for your company. We welcome your views and your compliments as well. Our Twitter handle is at The Trading Bell. Our SMS line is 22162. And always remember to start with the word bees. My Twitter handle is at O'Brien Kimani. Hashtag Trading Bell. And of course, our Facebook page is the Trading Bell TV show. We'll now take you back to Broadcasting House for Business Insight. My name is O'Brien Kimani. Have yourself a good night.